Today is the 11th of June, 2026, 10:30 a.m. CET and 4:30 p.m. Manila time. This episode talks about Brazil boosting oil production, SpaceX and upcoming AI mega IPOs, faster inflation in the US, and our advice for the ECB.
Hello to our listeners. I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, the founding CEO of Lundgren's Capital.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundgren's Investor Insights. Join us as we analyze developments in major economies and financial markets globally.
Hello, Peter, and hello to our listeners. Welcome to this week's episode. How are you today, Peter?
I'm extremely fine. We are doing some really fantastic business, and it is so close. It's simply very, very exciting, very good. It's very good for our investors, both in Lundgren's Capital, the mother company, and one of our funds. We just need the ink to dry, and then we have some good news. So that's of course extremely interesting, very satisfactory also when we can do something good for our clients and our investors. And the markets are also taking a bit of attention. Heavy interesting things going on as well that keeps us busy as well. Yeah.
Yes.
How are you doing?
Well, apart from being very excited about that piece of news that we're working on, we are in constant watch over the markets and actually a very eventful next few days. We're looking out for several major central banks with their rate decisions. We'll discuss one of them a bit later. And in general, yeah, we're looking out for what's happening, especially in the Strait of Hormuz, as we always do, as it enters, I think, the fourth month already. Of course, there was discussion of like a negotiated truce, but it seems like it's not holding. So we stay on guard and watchful as always. We're moving out of Asia for a discussion today. So taking it something new, we'll start somewhere in the middle. And first, let's look at Brazil. So it's one of our favorite coverage areas as far as our regular production at Lundgren's Investor Insights is concerned. Of course, the largest economy in Latin America. They recently bared plans to expand oil production. Currently, Brazil is eighth or ninth globally as an oil producer. They're looking to expand capacity by 30% in the next 5 years. So by 2032, they're looking at being the fifth largest oil producer globally. And of course, that's exciting. Any, of course, increase in global supply bodes well for everybody. They very recently discovered more oil reserves off Sao Paulo, and more investments have been coming in. And they're trying to bank on the global move to diversify sources of oil following the US-Iran conflict and the eventual global supply shock. And it's been continuing. Currently, Brazil's biggest markets are US and China, but they do want to send more volumes to Asia, which of course is welcome, but it might be a bit more costly considering the distance, of course. But if they are able to figure out logistics and produce quality oil, it shouldn't really be an issue, especially when the result is really about driving global oil prices lower. This adds on to the effect for the long term that we see just in May when the UAE left OPEC to also raise their own production. Of course, that is welcome for inflation and global prices. And it also speaks about the changing world order as far as oil. We have long said that it's really the driver of geopolitical shifts and soft power. But now we're seeing that maybe the oil cartel could see some decline in its influence and more of an open market approach regarding fuel production.
Yeah, but I'm sure that how to say it, the global financial market has welcomed the increase in Brazilian oil production. any increase anywhere is happily welcomed by investors and whoever around in the world, I would say, who's hoping for low energy prices. So it's an interesting move, and actually, it is not just a small increase; it is a measurable increase. So that's interesting. And when we are talking about Brazil, maybe as you did mention that in our content production, we actually cover Brazil both in one of our quarterly magazines, but also on one-to-one articles, what we call Economic Spotlight. And to do a bit of marketing for our own stuff, what we do. We have the reason why we can and we do produce content about different countries around the world is that we have actually contributors. They're very strong people, and they are handpicked by ourselves. We are very critical. They're very good, and they're trained by ourselves. And we also have a contributor in Brazil, Deborah, and she's actually very good. And it's worth to read what she contributes about Brazil. So this is not just something you and I reinvent together in an office somewhere. It is actually locally produced and it's locally inside. Just to mention, as we talk, it's not so often we talk about Brazil.
Brazil,
We leave,
yes.
yeah, we leave that to Deborah. Brazil is a fantastic, exciting country, both to visit and to also for investors. Anyway, let's head north.
Yes. Let's talk about the US, of course. It's hard to ignore the world's largest economy. And the most important headline that we're anticipating in the next day, actually, is the stock market debut of SpaceX, and to be followed by two other AI mega IPOs. So a lot of acronyms there, but of course, we're referring to the Wall Street listing of SpaceX, as we know that is Elon Musk's space exploration and AI solutions company, and then Anthropic, the creator of Claude chatbot, as well as OpenAI, of course, the maker of ChatGPT. They're all pursuing initial public offerings, at least this year. We're not so sure about the dates for OpenAI and Anthropic rather, but for SpaceX, it's gonna be June 12th. So it will be an exciting time for the markets already. There are expectations that demand will be overwhelming, but at the same time, of course, there is demand to participate in AI stocks because of how much they've rallied since 2025. But on the other hand, the past few days, global stock markets have been down, mostly, I think, in reaction to higher inflation prints, as well as some doubts about is this AI rally gonna continue, or is it gonna correct itself already. But I think the recent pullback is more of taking liquidity just so they can buy into the SpaceX and its peers as they go public, especially when the SpaceX IPO is actually expected to be the largest ever. At least we're not sure if OpenAI and Anthropic can topple that. So it's very exciting, and definitely there is excitement, there is anticipation, and it's likely to reverse some of that AI dumping that some people are seeing in the past few days. But of also taking a company public would ultimately involve greater transparency, so people will know better about the finances, their targets, their profit guidance, and it's like formalizing the startup appeal of these AI forward companies. And yeah, it's very exciting, and we think it would give a boost to global stocks, and it would somewhat offset the nervousness that's prevailing over the whole US Iran situation and the global oil supply shortage. So it would be an exciting next few days. We will be on holiday on Manila, but of course, we stay on watch about how great this SpaceX IPO would go and how tech stocks would be responding, what I see happening is that even if not everyone, of course, will get their hands on SpaceX shares, tech, the whole tech sub-index would get a lift from this listing. So, and that's what we also expect once the Chat GPT parent and Claude parent companies go live eventually.
The SpaceX IPO itself is fascinating in a lot of ways. And you and I, since last year, we've been calling for IPOs, and wow, here they are.
They listen to you.
Yeah, Elon Musk. It is fascinating, and what I try to observe, um, in particular when we are talking about SpaceX as an investor behavior, it's hard to judge, but in an
Mhm.
impression is that it is simply generating a true and big interest from investors around the world, from private investors around the world who are just pouring money into SpaceX. Maybe without looking so much into as how the investment in
Mhm.
detail is structured, and by far not how the pricing is. Yeah, it is. This just seems to be a big wave of private investors who want to be on this wagon, and that's as simply as it is, and that is interesting. And it's after all fascinating how a person like Elon Musk he can generate such a wave as an investor wave.
Mhm.
It's impressive. There's nothing else to say than it is impressive. But there's also say a bit of something about, as mentioned, the investor behavior and appetite right now. At the same time, I have studied sort of some what we would call very classical IPOs of very classical companies,
Mhm.
fine companies in really good shape, fine balances, strong market position, but sort of pretty boring actually. Very, very sort of just doing their business.
Mhm.
Nothing fancy, nothing IT. Of course, they might use IT somewhere in their own company infrastructure. Of course, they do. But companies are good to have in the portfolio if you can get them at the right price.
Yeah.
Then they will generate fine in the portfolio. Also, actually create some stability. But these IPOs have been, particularly in the aftermarket or the period after the IPO.
Mhm.
We've seen some. There've been the underwriters of the IPO have been out supporting the stock as a very early from not dropping below the IPO price and all this stuff. It simply doesn't generate the same sort of move and wave, despite it's actually good quality. And it also is a sign of how our global investment market has changed the past 5 to 10 years. As what is hot is hot, and it stays hot for just a couple of years, max. And then investors move on to the next hot topic. Right now is AI. Yeah. That is pretty dangerous because that really generates pricing spirals that are somewhat more difficult to deal with. They're not rational. They generate volatility and nothing else. But this is just how the market is and is behaving and becoming. And we need to accept that and we need to live with it. But it's very different. And it's again, the stock market has changed in that way the past 5 to 10 years. Just as a really compared to for 5 to 10 years ago. And this is heavily interesting as well how people invest.
Mhm.
And this is the SpaceX is a fantastic example on how it's much more a wave than a
Yes.
discussion about what's the right PE for this company. That's how we were grown up. This discussion and all this stuff. No, it's not how it works. So this is it is really fascinating, and I fully understand. Not as an employee, but as from an interest, sort of just plain interest, it's worth to to spend an hour on the day off on the SpaceX show, because it is fascinating and it's very interesting. Good.
Another major development that is affecting sentiment in Wall Street and across international stock markets is inflation. We've talked about this
Yeah.
quite a bit in past episodes. And the US inflation print just came out yesterday. And
Mm.
unsurprisingly, it is even higher. It's a 3-year high at 4.2% in May. And it's also largely driven by energy costs.
Of course, it's no surprise that the headline inflation is higher due to energy prices. We all have expected it, and it didn't hurt the market, yeah, in that sense. But still, even expected, when it arrives and we see it on the plate, 4.2%, it's painful. Yeah, it hurts. Somehow it is serious, and it's of course why it's something that we spend a bit extra time on to dive into, to reconfirm or not reconfirm our opinion about it. And it's also why we raise it today in our podcast. But the core inflation is doing okay. It's 2.2, 2.3 without energy component. We're still not nervous, as mentioned several times. We get nervous if we see second round effects, i.e., if this high headline inflation number all of a sudden spreads into normal pricing of whatever goods and services. We haven't seen that yet, and we expect energy prices to come lower, i.e., we expect also the headline inflation to come lower again. And this is actually how the majority of the market is thinking, so we are not very
Nervous.
outstanding in that way. Most important is, how is the central bank thinking? And the Fed, we believe, is thinking in the same way. And that is why they have the nerves to stay calm. And that is very different compared to what we're going to happen today in Europe.
Yes, as we speak, the ECB members are probably meeting and voting right now. And
Yeah.
by the time this podcast is out in a few, a decision is out.
Yeah, we have started to also disclose when we record this podcast. But right now, it is actually very important to mention that the recording is taking place 10:30 CET European time, and we have probably one of the world's shortest preparation time and turnaround time to be able to publish a podcast. It is Kai is doing a fantastic job. It's 2 hours or something. Yeah. So we
Definitely,
might,
yeah.
unfortunately, sort of maybe hitting the ECB press conference. But anyway, probably ECB will hike the rates today. It's also expected in the market. And normally we should say here at Long we are hawkish. Yeah. So we are pretty conservative, pretty classic. We are not afraid of a central bank as being conservative in the same way a hawk, keeping rates a bit higher than many would like. But we do not see any reason for ECB to cut to hike today. Not at all. Sort of the same conversation. We have inflation in Europe is higher due to high energy prices. Core inflation fine. And let's be honest, it is certainly not due to growth that the inflation is coming up in Europe. So there is no engine that is running hot. Not at all. It is completely dead cold. And ECB should keep the rates where they are. It's not that it means extreme lot for growth in Europe, but there's no reason to hike. As long as we trust energy prices coming lower and there's no second round effects, ECB should just keep calm. It fits well with another basic view we have on the ECB. They always take the wrong decisions. So it is simply how we are here. Yeah. We respect the U.S. Central Bank Fed a lot more. That is a true central bank, and they are doing a fantastic job. So yeah, that's how we see it.
Yeah, the question really is like, now that we know that energy prices will likely stay higher for longer, at least longer than
Mm.
what was initially expected, there is some pressure for central banks to hike. The
Mm.
Fed is doing its rate meeting next week, first under Kevin Warsh, a Trump appointee, and he's likely to stay on hold, or at
We'll
least
see.
that is the
We'll see.
expectation. But the ECB, apparently the market sentiment is otherwise. It's a 25 basis point hike for today, and another by September is the expectation. So yeah.
Now, we haven't touched Asia at all. What is sort of the feeling in Asia among central banks?
Mhm.
What are
I
they
think
up to? You think?
yes. Some central banks have hiked already, if I remember correctly. Apart from the Philippines, India, I think, hiked rates already. It's
Mm.
more of inflation. It's largely inflation driven, especially now that some governments are winding down or ending stimulus or cash subsidies for fuel. That is the next intervention, so to speak. But of course, the impact is some deceleration in overall GDP growth. But of course, they will still manage a respectable growth pace. It's unlikely to see zero growth in Asia, at least in
Mm.
developing Asia right now,
Well,
which might not be the outcome if the ECB does pursue a rate hike.
yeah, we'll see. For sure, stays. It will be interesting as it is. It's a hot topic among all central bankers, for
Mm-hmm.
sure. And should also be among us, the investors. And that's of course also why we spend time on it. It can actually generate some uncertainty as well. So we'll stay. We'll see what happens. Okay, Mel.
Well, as we always do in this podcast, Peter, let's review our outlook and in terms of our favorite sunshine and clouds scenario. We do
Yeah.
still remain optimistic, Peter.
There's no change, so to say. We fully recognize all the challenges we are talking about. On the other side, as we had also today, SpaceX on the table, it is not impossible to generate investor joy and waves and interest. First of all, and that actually shows something. There's appetite out there. We still see, as of course, the households are pretty strong despite they are under pressure from higher energy prices. And again, as always, we like countries with strong domestic growth and also countries where there's some fiscal room for maneuvering and do some initiatives also compared to growth and reform work. In Europe, we really appreciate those countries working with the labor market, i.e., increasing the work hours.
Mhm.
So there are a lot of good things out there. There are more could do more. But all in all, we see the world as full of opportunities and we are overweight risk, no doubt. This is how we see it.
A lot of things
Um,
to monitor further, Peter, of course, as we always do.
Good. It's a pleasure, as always. Thank you, Mel, for hosting.
Thank you, Peter, and thank you to our subscribers.
Thank you for tuning in. As always, we keep a watchful eye on market shakers and movers. Catch the next episode of Sound Economies with Mel and Peter, a podcast by Longines Investor Insights. Available on Spotify, YouTube, and wherever you listen to podcasts. Longines Capital has been in the business of investment advisory and wealth management for over a decade, with our high-performing and multi-awarded funds to show for it. We're taking this to the next level through an IPO in 2 years. Join us in this journey. Visit our website to learn more.